Hey guys, this is Mr. Oxy. I'm coming at you live from Palm Beach in Florida. Yeah, I'm kind of at home. It is Tuesday evening. It is October the 12th. And there's a lot of stuff going on in the marketplace, especially as it relates to energy. One of the things that we've discussed a few times is Oxy kind of tied to or married to the price of WTI? And if so, why is it when WTI, for example, and gas prices and Brent and everything else is going up, Oxy doesn't go up as well? Now, of course, it's very, very easy to take a very short-term view on that particular topic. So what I thought to do was just dig a little deeper into all the things that are going on. So we currently know that we're in a hyperinflationary cycle. I've said this many times before in my previous videos, but let's just take a look here quickly at Occidental. So if you're long Occidental, $33, not too bad, huh? But you're down 1% today. It's kind of like the same emotions we have from time to time. When the stock goes up, we're all happy, and when the stock goes down, we're all sad. But what about if you take a look over a longer period of time? And by the way, just for what it's worth, I can share with you that I've actually just added to my long Oxy position, and by doing so, I'm obviously buying it at a significantly higher price compared to my cost basis. And my cost basis on Oxy right now is about $16. So if I extend the period a little bit, this is over a 5-day period, we're up about 3.5%, and 25% over a 1-month period, not too bad. Struggled a little bit over the last 6 months. We went down to, what was it, $24 or something like that. I probably should have added there, but it doesn't matter because this is, as I said many times before, this is a medium-term position for me, and I don't mind adding at the current price. I think it's cheap. Over 1 year, year to date, 90%, and look at this, over 1 year. So if you had stuck with me over the past year and you had stayed long and strong in Occidental Petroleum, you would have been up over 200%. So you have a two-bagger on Occidental Petroleum. So that was obviously pretty good for you. What I want to do is take a few minutes and talk about some of the things that are going on in the marketplace. So we know we're in a sort of energy crisis scenario right now, which is leading to inflation, because obviously as the price of energy goes up, the price of everything pretty much goes up. We should look at some of these commodity prices, sort of see where they are, and then maybe question again whether your long energy positions are keeping and staying on track with the increase in the commodity prices or not. We want to look at some of the oil fundamentals, and then we can sort of wrap it up and see where we're at. So let me go back in here and just pick up a couple of headlines quickly. So suddenly we are in the middle of a global energy crisis. Surprise, surprise, right? What happened? Now this is current. This was updated October the 12th, so it's today basically. Far from emerging from the COVID shock awash with fuel, as might have been expected after an economic slowdown, the world is entering a new crisis, the likes of which it has not seen since the 1970s. Now, on this particular note, I just want to pause for a second as well, because when we think about the COVID shock in terms of how it impacted and affected people, there is no question that the majority of people isolating, staying at home, not going out as much, certainly not going out for entertainment like movies, restaurants, bars, etc., for what was it, almost a year, impacted the demand for energy to a degree. And that's one of the reasons why we saw the huge change in the supply-demand curve starting sort of around March, April of last year, when kind of COVID finally hit, and everything sort of went down from there. What's interesting about that is that when you actually sort of logically, rationally think about business in general, and I'm not going to suggest for a minute that business was not impacted, but for the most part, many businesses continued sort of as normal. Now, some of those businesses are quite unique and special in the context of companies like in the United States, Walmart, Amazon, etc. They actually did better, not worse. Some other companies like the big pharma companies who created a vaccine, if you want to call it a vaccine, and I don't want to go there because it's too divisive and political, but regardless of how effective the vaccine is and what its efficacy is and what how efficacious it is in terms of inoculating people against this virus. The fact of the matter is companies like Moderna and Pfizer especially, and to a lesser degree, Johnson & Johnson, AstraZeneca have just spiked. Moderna has gone like off the charts in terms of profitability and created a few billionaires in the process. But the rest of business has not actually necessarily changed too much. I can tell you, for instance, from a personal point of view, that in my businesses, we kept manufacturing and we kept building inventory, because at the end of the day, what you got to do is say to yourself, like, we want to keep busy, and you know that these things are cyclical. COVID or whatever it is, as a pandemic or a virus or whatever, it's not going to be with us forever. In fact, it might be with us forever, but what we're not going to do is be subject to the same stringent lockdowns and all kinds of things, and all the things that happened during most of 2020 and some into 2021. That's not going to continue as it was. People will get on with life, regardless of how long it takes. It will happen eventually. European and Asian gas prices are at an all-time high. Oil price is at a 3-year high, and the price of coal is soaring on the back of energy shortages across China, India, and Germany. The odd one out here is Germany. So we know that China and India are burning a lot of coal because they need a lot of energy, and their developing economy is burning energy as if it's going off the charts. And don't forget that nearly half of the world's population live in China and India and the surrounding areas. How about Germany? Germany's burning coal. Why? Because all the green energy initiatives that they had, literally on a large macro scale, have failed. Wind power and solar is completely useless in terms of generating the power that they need. So now they're importing power from wherever they can get it, and they're burning coal. Guys, I've said this before, there are people from Germany who are members of our investment community here. If I'm wrong or if I give you incorrect information, please correct me and tell me. The surge in demand is being driven mostly by recovering economies and anticipated extreme weather across Europe and Northeast Asia. China is stockpiling domestic coal and gas reserves, and Russia is reluctant to supply gas to Western Europe. Why? Because it keeps the price high, right? So the demand is soaring, but at the same time, you don't want to produce more. Occidental is not producing more either, right? So you can kind of see where this is going. It's like the demand is increasing every single day, and the people who produce are saying, we'll just keep doing what we're doing. Even OPEC is doing the same thing. The media, of course, tells us that in Britain, the shortage of truck drivers to move fuel has led to panic buying amid fears of a shortage. I don't dispute that, except don't lose the macro in terms of just looking at what's happening at ground level. If your local gas station's out of gas, that's not a macro issue, that's a micro issue, and it specifically impacts you. And of course, they need to throw in Brexit because we're talking about mainstream media. So whether you're for Brexit or against Brexit, I don't particularly care, but they need to throw in these things anyway. Compounding Britain's production problem was its so-called windless summer, in which renewable production was much lower than normal. Well, wind is pretty much ineffective as it is anyway, and we'll come back to wind in a minute when I wrap up this video, but it is ridiculous. If you want to rely on wind, you may as well just start burning candles again if you want to light up your home. However, that has not stopped British Prime Minister Boris Johnson from remaining committed to wind generation, and he says he wants the UK to become the Saudi Arabia of wind power, with offshore wind farms generating enough electricity to power every UK home within a decade. Yeah, okay, good luck with that, dude. Oil prices have soared in response to the windless summer. That's the reason why. And British and German difficulties in getting access to Russian gas. Surprise, surprise. Putin's turning the screws on you here. These increases will soon hit Australia, which imports 80% of its petrol, diesel, and jet fuel. Interesting stuff. That's kind of just where we are. Let's look at the live commodity prices quickly here for a second. Natural gas is just like off the charts, $5.40. This has jumped quite dramatically in terms of where we came from just a short while ago. So if I go back, for instance, 1 year, look at natural gas. Amazing, huh? Let's look at the percentage over here. It's up 113% over the past year. That's absolutely amazing. You know, that's people say natural gas has spiked significantly and more so than than oil and gas, but that's not necessarily true, because look at WTI. So if we look at it over a 1-year period, 100%, almost the same as natural gas. So there's not too much of a difference there, and Brent is pretty much the same as well. What we want to do quickly is look at the oil price fundamentals. This is a weekly forecast, and let's see what's going on here. US West Texas Intermediate and International Brent benchmark, Brent crude, too many B's. Futures had an up and down week, but the dust is finally cleared and the market was trading higher. You can have an up and down week. If you take 1 step back and 2 steps forward, you're not really going up and down or backwards and forwards, you're just going forwards. The price is going higher and higher every single day. Last week, WTI crude futures settled at almost $80. We see the current price for WTI at over $80, sorry. Crude oil prices were lifted at the start of the week when OPEC and its allies decided to increase production by 400,000 barrels per day. Excuse me for smiling on this one, but there are sort of two schools of thought here. On one hand, people are saying they could produce more. Of course, why should they? Because they will just bring the price down, and who wants that if you're OPEC? On the other hand, people are saying the reason why they kind of increasing production by 400,000 barrels per day, which is nothing, is because they can't produce anymore. They've undercapitalized, and their capex and operational investment over the past year has been so poor, and the number of rigs that are operational and wells is so diminished from where we started when demand was running at about 100 million barrels per day. There's not much they can do. So I'm kind of more leaning towards the fact that they can produce more even if they wanted to. Sure, they can go from 400 to 500, maybe 600 or whatever. But we're not talking millions. This is not a lot. I mean, 400,000 barrels per day is like less than half, almost a third of the number of barrels per day that Oxy is producing by itself. It's not a lot. Bullish traders were a little nervous ahead of the decision amid talk of an even bigger increase. How big? Would it have made a difference if they went from 400 to 450 or 500,000 barrels per day? It's nothing. It's absolutely nothing. They're just playing a game here. Prices retreated midweek following the release of bearish inventories data from the American Petroleum Institute and the Energy Information Administration. No, it hasn't. Well, what's actually happened is it's got nothing really to do with inventory, strictly speaking. Of course, it has to do with inventory if you kind of follow the news and you say like, oh, okay, so this is different. So let's quickly look here what the delta was, right? So crude inventories rose by 2.3 million barrels in the week of October 1 to 420 million barrels compared with the analyst expectation in a Reuters poll of a 418,000 barrel drop. So again, like I don't want to make light of this ridiculous report, but this is nothing. So they had a rise or an increase of 2.3 million barrels, and they expected a drop of 420,000. Whatever, man. What's happening here is that the largest oil companies on the planet, which includes companies like Goldman Sachs, BlackRock, Morgan Stanley, or whatever, they're just trading. They're making money, and some people are getting the short end of that. That's pretty much what's going on. No big deal. Nothing's happening except for the fact that demand is off the charts and it's super hyper inflationary. So let's look quickly at the inventory, specifically US crude oil inventories rose by 2.346 or 2.5 million barrels in the week of October 1st, ending October 1st, a second straight period of increase, and compared with market forecasts of a 400,000 million barrel drop. Data from the EIA Petroleum Status Report shows. So what? These numbers are insignificant and mean absolutely nothing. If you are making the inventory the crux of your thesis as to whether you want to invest in energy or not, I'm going to suggest that that is probably not what you want to be doing. Meanwhile, gasoline inventories were up by 3.2 million barrels, also defying expectations of a 279,000 barrel drop. So interesting stuff here. I'm going to wrap it up here just with a quick little Twitter picture. So this is Dr. Humphrey. He's tweeting clean, green, and renewable, net zero, Queensland politics, This is his picture of his local Queensland wind farm. Now, you know what the sad thing is about this picture, guys? It's the fact that everything that you see here in this picture, other than the blue sky and the puffy clouds, is going to landfill. These blades cannot really be recycled, and the masts are too expensive to recycle. So all you can really do with it is throw it away. So when it's ineffective and it doesn't work, that's what you end up with. And to make matters worse, the cost of replacing those incredibly beautifully attractive windmills is significantly greater than the cost savings that you might be able to achieve if they were functioning and fully operational as had originally been intended. So guys, that's kind of a wrap on this video. So this is still Mr. Oxy. So I'll just stay Mr. Oxy for now, maybe for the next couple of years or so. As I said at the beginning of the video, I did add to my Occidental position. I added quite a significant chunk of shares, overpaid, you know, buying Oxy for like $30-something, pushing my cost basis. Can you believe it? My cost basis on Occidental was $11. Now it's in the mid-teens, right? But it's still pretty good because Oxy's trading at $30 and my cost basis is in the mid-teens. So, you know, year to date, it's still plus 100%. I hope you guys are in a good position too with your energy stocks. Today and yesterday, we pulled back a little. I mean, Oxy had a nice spike yesterday morning. What's today? Tuesday. Yeah, Monday morning. Oxy went up nicely to what was it, over $34 a share, only to pull back again to about 33 where it is today. It doesn't matter. This is all short-term stuff, and it's going to correct on a go-forward basis. I'm still long and strong. Still feel bullish on Occidental. If you agree or if you disagree, you can let me know in the comments. I look forward to chatting with you guys. Thanks for watching. Have a great day. Bye-bye.